Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, Anthony here. Okay, I want to explain our trend continuation strategy. Okay, not a trend reversal, a trend continuation strategy. This is a trading plan and a full tutorial. Please use this video as a tutorial, save it in your bookmarks and come back to it. Okay, I'm going to go through everything you need to know to set up a reliable trading plan and how to trade successfully. First up, we have our dot alerts. I quite like them. I've got them actually set up now on the 5 minute, 15 minute. You can set them up on the 3 minute, 1 minute if you like. So this is the alert that brings you into the chart. That's it. Number one, we have the alerts. Right over here, you can see the alerts going off. So that's the first thing, we have the alerts. Now how to set the alert? Okay, quickly, trend channel, click these dots, add alert on the time frame, extended, once per bar, handbell I like, it's fairly quiet, and then create. You need to write this down and make a checklist. Trend continuation. Okay, the alert fires come in, here's a multi-chart layout. What's the trend on the daily? Open it up. It's clearly bearish, red candle, so we want to be selling. We can see it's in a bearish trend. What's the trend on the 4 hour? This is the checklist, guys. The 4 hour is clearly bearish. We want our trend lines to be heading south. We want price to be under the cloud. And we're looking for pullbacks into this midline. All right, this one's a little bit out, but I'm okay with that opportunity. Then what we need to do on the 4 hour chart is go here, trend bars, open it up, go to inputs and enable accumulation distribution level. These will give you important levels where smart money, bigger players accumulate and distribute. Okay, buy and sell. Now you can untick this one. We're going to go high low, level 2, and if we bump this up, let me just show you what this gives us. See? And what this is, and I'll just leave this one highlighted, you want to be selling away from support and resistance zones. But what this is giving us is this green candle, high, low, before this move, distribution level. This is where smart money builds their orders short, and it's where this move originated. Now there's another term, order block. Institutional order block. So it marks it up. So what you want to do is you want to have this on the 4 hour. We need these 4 hour levels. When price trades into it, it's a potential opportunity. Sometimes it can trade through and it'll look for order blocks that are further up, but in a lot of cases, in most cases, this will give us an opportunity if everything else lines up. So we're looking for that. We're looking for price to trade into that. So what we can do now is we can mark this up. So pick up the rectangle. It's the high and the low of that candle. And you can see our shaded zone has already picked it up. All right, so then you can mark this as a 4 hour sell. And if you click this over here, that will transfer it onto the other charts. So now we're looking for an opportunity when this trades into this level. Right, so you can see the shaded zone. Now the other thing that this does is it gives you this midline. Okay, so we want that. That's quite an important line because quite often you'll find price will actually move into this level here. So we need to know where the mid level of this order block is. Let's use it as a reference. So that's that. We have lower highs, lower lows, and what we need to understand is that this is a trend on the 4 hour. This low over here got broken, so we have a break of market structure here. Break of market structure, and the last green candle is this distribution order block. Now what I did tonight, I sent this into Discord. If you come down into our VIP order blocks, okay, 4 hour order block, and these are not trade signals. I mark up these order blocks and I give my members an opportunity then to apply the strategy. And of course you get my trade signals. By the way, if you haven't already and you're watching this for the first time, go to the website tradingwithanthony.com, click the link below and you can gain access. Back to the chart, and we have a trend continuation, 4 hour order block trades into. Then we go to this chart over here and we're looking at the 1 hour order block. So let me just pick up the trend bars again. You come down to accumulation distribution, enable. Look what it's doing. Okay, so you can increase the intensity, you can back them off. Look what it's giving us. If we go in here, let's take this away. See the dotted line? It's giving us the 1 hour order block. That's this candle prior to this move, marking up the 1 hour. So what we can do then is we can overlay it with our drawing so that we transfer this over to, if you click this over here on the left, it'll transfer it to all the other charts. So we have a 4 hour, a 1 hour, it's a nested order block. We're trading this currently and we're in the money at the moment. Now the other thing that you need to look for is this price gap, 1 hour price gap. Now what is a price gap? See, you need to understand what the market is looking for. The market is looking for 1, liquidity, and 2, to rebalance. Now these areas, this 1 hour distribution level, right, order block, this is also known as a balance area. If you open this on a smaller time frame, lower time frame, you'll see that the market was ranging through here, balance area. Okay, so what we have is a balance area where the market orders, buy and sell orders, are balanced, an equal number, more or less, of buyers and sellers. And then what happens is the market gets volatile, breaks out, and when it trades off, you get what's called an imbalance. So the market will then look to trade back through. See how it's traded? This candle has come back through into this price gap. It's rebalancing. So it trades into the order block. This is where it's looking for liquidity. Where is there liquidity? See this move? Liquidity resting above. Okay, so there's stop losses. Everybody's shorting here. There's stop losses above. This is called buy-side liquidity, buy stops, right? So what it wants, if smart money wants to short it, they need to move it into here so that they can soak up these stop orders and then they trade it. So you need to understand the market's looking for liquidity. It's resting above here and it's looking to rebalance. In other words, trade back through into this balance area or at least fill these gaps. So now this gap's been filled. This is no longer valid. It's gone. The gap has been resolved. So the gaps, you're looking at this candle here, left and right, and you can see that there's a gap in between. That's an imbalance, right? That's a price gap. So what we do then is we mark up this candle here, left high, candle right low. We pull that through and we can name that as a price gap. So that's now. So we look for a short opportunity, and that's what we did tonight. The other thing on the hourly chart that strengthens our argument to short this is this break here under the cloud. So we've broken out of our cloud. See this cloud? Right. We've broken out under the cloud, bearish. This could give us a nice outcome. Okay, just a quick interruption while I'm editing the video as it's taking time to do the video. This is our Kiwi dollar outcome so far. Gain access to our live signals, guys. TradingWithAnthony.com. See you in there. So now let's have a look at it on the 30. So we go down the time frames. Right, the 4 hour and the 30 stack up. The 30 is supporting our argument for a short. The pull back into these dots, resistance, right? Our 4 hour order block, our hourly order block, price gap has been resolved. And now we're looking for continuation down. These lines, this is a daily level of resistance. The orange lines that you see on our indicators are weekly, and the white lines that you see on our indicators are the monthly. Okay, so the 30-minute is trading bearish. We can see the cloud. That stacks up. And then we go down to the lower time frame. Now, what we're looking for here is this. I've marked up London session open. Now we're trading into the Asian session. This chart pattern is what you're looking for. See how you have this range? This is building liquidity above and below the range. This is set up by market maker algorithms to specifically do that. Smart money wants to sell the first thing they do with this is they send it down because they know that a lot of retail traders want to sell. This move here traps retail traders short. There's liquidity under because there's also retail traders buying on that move. They soak up this liquidity here, and that gives them what they need then to spike it up into this liquidity pool above. This is a typical market maker price manipulation. And what they're doing here is they're loading up. They've been working their orders. They're loading up short, and we get our trade. So how do we enter? Our indicators, first up, we get this signal here. We're looking for a bearish opportunity given that this is resistance, right? Okay, we're trading into resistance, and now what we're looking for is the rotation. We see the range, we see the fake out, the shakeout, and trades back, there's your entry. What we're looking for specifically here is this. Well, first up, our strategy is the dot. We want to see these lines. So these are divergence lines, bearish divergence, and then we want to see our red triangle. This combination, these three things, gives us a reason to short this. And we're trading away from resistance. What's happening here is this. We have this candle here. Look at the candle left and the candle right. Pull that through. This is a price gap imbalance. We want to see this wick back into here and fill this gap. It does. There's an imbalance here as well. There's also an imbalance here. Now watch out, so that can actually wick back up. So the market will look to rebalance. But what we get now, lower lows, lower highs, and our move. So our entry is based off, brings us into the chart, tells us that there's a divergence, bearish. That's our signal right here. Once we see this signal, we're looking for the pullback after it. And then we take it short when it trades into this price gap. The thing with this is you probably want to close 2/3 of your position fairly early. Now, I set this up on a 4-hour time frame, but I'm going to actually suggest that my members close this 70% of your position. The next part of the video is incredibly important. This is what will make or break you as a trader. This is the reason why traders lose money and blow their accounts. In fact, it's all explained in my videos that I've done on risk management. Please watch them. I don't want to go through it all here. I will very briefly. You enter stop loss above the high. This range must be a percentage of your account and be consistent with every trade you take. If you fail to do that, seriously, you will fail as a trader. Trust me, I've been there. You go in here trading all sorts of different instruments, crazy lot sizes, big and small, you will blow your account, trust me, 100%. You have to manage your risk. And what I mean is that you allocate a certain percentage of your account. Okay, I've gone through it in risk management. Please watch it, and that will explain everything. So keep your risk consistent. I don't know, it could be however many trades you take, maximum 2% of your account all up. So never exceed that with however many trades you've got open. Small is good. Trade small and be consistent. If you go in here with big lot sizes, you will blow your account. It'll stress you out. Okay, keep it small, and you've got a sound trading plan. Trade it, commit to the stop loss, and target one. Either one. Okay, if that gets reached, fine. Business expenses. See, this is coming back now to fill in this gap here. Watch it turn around. Business expenses. Commit to stop loss or T1. So a T1 always take, I actually take 65%. I open 2 positions on MT4 or MT5, whichever I'm trading. one position is 65% take profit and the other one's 35%, or you can go 70-30. Watch my video on risk management. Okay, so we've got a price gap right here. If we look at this left and right, pull it through, look where it's trading. So it's this candle, this thin candle here left, the low and the high on the right, okay, that range. That's what it's coming back to fill, rebalance. Down we go. Hopefully we should see this continue down. Notice also how the market works around the London Open is my 17. So mark up your market open. Oh, I've marked it up. Okay. See what happens here. See how it trades right on the market open. We trade down. Always look for the rotation. Grinds up. We get this. And look what's happening now. It's trading up. There's your candle up into the Asia close. You watch it rotate. Okay, so it's going back for another stab at liquidity. It can come up here. There's liquidity resting here. Everyone's shorting it, right? So this is where they attack buy-side liquidity. Take out stops, stop run. That's all that is. Just sit tight and commit to it. Either it gets taken out, and it can. Okay, smart money. Look, you know, they can decide. There is actually people at the top with software, and they discuss where they want to push the market. That can do that. Most cases, we're going to see it work out in our favor, but every now and again, be prepared for it to take you out, right? So this is just another go at liquidity here. I think this is going to be quite a nice outcome. And again, stick to the plan. Let your stop get taken, it doesn't matter, and most of your trades will be winners. And the idea then is close your 70%, whatever it is here, a T1. This then is a profitable trade with your stop loss there. Leave it alone if you want to, and let's see how we go. See if we gain some traction with it. And then once we get through this and we start to see it give us some results down here, then you can look to trail it, and you know, just obvious levels. You can move your stop loss down to that. That would be the next port of call for a stop, you know, trailing your price. If you get good at this, you only need a trade a day, 1 or 2 trades a day, to be incredibly profitable. Seriously. Once you're comfortable, you have a strategy and you are comfortable with it, and you know it performs day in, day out, that's when you can increase your lot size, your position size. But the bottom line with this, you must be disciplined. You have to. I've blown accounts, guys. I've done it. And the biggest mistakes I made were going in with all sorts of crazy lot sizes, mixing it up, okay? Not understanding how to manage risk with a set percentage of my account allocated per trade. All right, it's in my video I mentioned. So that's number one. Crazy lot sizes, and you'll blow your account. You seriously will, because let's just say today the dollar value on this range is $100. With one trade you're risking this, the next trade you're risking $500. The next trade you might be risking, I don't know, $50. And then the next trade you might be risking $800. And then it goes against you, and you lose that. Right, so you have to keep this consistent. It's not dollar value, because as your account grows, this will grow. So it's a percentage. So that's the first thing to be disciplined with, to get a handle on. The second thing is absolutely 100% commit to this. Never move it that way, ever. There's your $100, whatever it is, percent of your account. Let it go. It gets taken out, it gets taken out. Commit to that. Never move your stop loss away. Don't sneak it up and, you know, the thought, oh, I'll just give it a little bit more room to breathe. No, just let it get taken out, guys. Let it go. Okay, I've just had a look at our 61.0. Yeah, that was our actual entry tonight. Here's the trade here. 61071. If we go stop above, then this is going to be target 1 down here. Nearly reached. Okay, see how it rotates? This is the Asian close. Trades up into it, and then we get the rotation. So now it's hopefully going to be heading down into the New York Open. This price gap now is resolved. What have we got? That's it. Session time, I think the New York opens at my 22. There it is. So what we're hoping for now is to see this trade down into the New York Open, and then be careful because it can rotate here and we get the pullback. So make sure you take your profits early and then just trail it. In any case, guys, I think I've more or less covered everything. Please make sure you go back and watch this video again. Use it as a tutorial. Set up your rules, and if you trade well with discipline, you're going to have a great outcome. You'll be able to build an account. Okay, so with that, I hope you have a great day. See you in the next video.